Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Monday. I hope you had a good weekend. Starting to heat up here in the valley. I think it got to 100, which has been great. What a great start to the summer months. I'm sure the heat will get here eventually, but so far it's been pretty darn good. Speaking of the heat, apparently, there is no deal. Shocker. Wow, didn't see that one coming. And now, if you want to believe it, all talks are now halted. What comes next, I don't know. But it is gotten gold down, silver's down a little bit. Wall Street's down. Oil and the 10-year note are significantly higher. Get ready. I'm going to have a gold special and a silver special, and they'll all be below spot, all of it. That is coming up. It is the 1st, so it is now June 1st. We will get jobs numbers this week. Wall Street is praying for bad numbers. That's kind of weird, but that's where we're at right now. We'll get JOLTS, that's job openings. We'll get ADP, but we'll get jobless claims. And then, of course, Friday, the government jobs number. We will get some service stuff, ISM data, and a bunch of Fed talkers. So that's at least on the economic side. That is what we can expect this week as far as numbers go. Obviously, with the announcement that all exchanges with the United States are over, according to Iran. Fresh attacks in Kuwait by the Iranians, fresh attacks by us in Iran, and, of course, fresh attacks by Israel inside of Lebanon. They're now saying, I thought the strait was already all blocked, but Iran says, yeah, now we're really going to block the strait. So not sure what that means, but in any event, the Houthis in Yemen saying that they may be ready to join the war. So I don't know, again, like I said, this is obviously part of the plan, driving up cost, and then somehow hope we can grow our way out of it. Kevin Warsh, you know what? I think Jason nailed it. He may be the one left holding the bag on all of this. Jay Powell, remember him? Jay Powell, the former head of the Fed, still on the board at the central bank. He came out with a warning that attempts by the U.S. government to exert greater political pressure on the central bank will damage public confidence in its independence. Listen, I think here's the funny thing. Really, when you think about it, he's not wrong. Right? Yeah, sure. Logically, that probably makes sense, right? Hey, don't criticize us because then, people will think we're not doing a good job. But here's the reality, right? They're not doing a good job. The government's not doing a good job, right? Both of them are literally trying to figure out the fastest way to destroy the country. I mean, it feels like that at certain times, doesn't it? It really, truly, it's amazing. I mean, think about last week, just an average week. $742 billion of Treasury securities we had to sell last week. Now, we know because of where inflation is, the Fed is now behind the curve. Right now, they promised us when they invented this 2% nonsense, right? Ben Bernanke, Janet Yellen. Think about this. That was the first time that the central bank openly told you, we want to steal from you, but just a little bit. We just want to steal 2%. Now, granted, the way they calculate 2%, right? We're going to tell you we're stealing 2%. Most likely we're stealing 4%, but we'll tell you 2%. And it's been that way since they came up with. Now, where did this 2% number come from? They just made it up. You're right. Yeah, they made it up. Now, I've already told you, Kevin Wart's going to make up a new number. Right? The number we hear, 3.5%. Just steal a little more from you. Of course, what does that really mean? We want your money to buy less every year. Now, right now, they're telling us inflation's 4%. That's what they're saying. What does that mean? Well, people normally say, oh, that means something is more expensive. Yes, but it simply means we want your money to buy 4% less today than it did just last year. Do that 10 years in a row. We'll be back after the break. 800-951-0592, Patriot Radio News Hour, Joe and Jason on this Monday. Before we get to the market, I got to remind myself, this Friday, June the 5th, 7 p.m. at the radio station, Tim Blake and Gage will be there as well from Texit and Iskander now. So please RSVP. We're going to feed you. I know Jason's got something lined up for everybody. It's going to be good. But please make sure you RSVP just so we have food for everybody. And of course, obviously, right, we don't want to, food's not cheap anymore. You guys know this. Look at inflation, right? We're just talking about it. To get your food and drink, it's a little bit pricey. Call us and let us know you're coming. Just tell us how many people you're bringing so we can be prepared. 4 more. Throw 4 more on the Colorado list.
They call me on the weekend. They call me this morning. It's like I say, call the 800 number, but I got to update the list for Joe. So
yes, and then Phoenix, same thing. Monday, June 15th, 7 p.m. in the Platinum Lounge at Dave & Buster's at Desert Ridge. So most of you in there, you guys know where the Desert Ridge Mall is. The Dave & Buster's there. The Platinum Lounge upstairs, and then you got to kind of go to the left past where all the video games are and all that stuff. It's a whole private room, and that will be also 7 p.m. June 15th. Again, same thing. Please, please, please RSVP so we have the food right for everybody. And bring all your questions, all of them. Don't hold back. I think you guys, and it's going to go a long way to either feeling a lot better about things or, hey, you know what? I'm going to prepare myself for the worst. Either way, that is coming. So make sure you RSVP. Let's take a quick look at the markets here. Right now, the Dow, it's not bad. Why? Because we're in a bubble. Down 150 points. The S&P's down 2. The NASDAQ, it's up 30 points, all on NVIDIA. I don't know. They've made some kind of announcement. 10-year note. Here we go. So 10-year note got into within a whisper of the dreaded 467, right? Got down close to that 440 level, right? That used to be the level, and then we broke through it. 451 this morning, up 5 basis points. And by the way, that's a big move. We don't like to see that. Crude oil's up $7. I guess the good news is, at least for today, it's still below 100. But I don't know how much longer that is going to last. We'll see. Gold right now down $75. It's off the bottom here. Silver's really showing a lot of resilience here. It's down, let's say 70 cents. 70 cents. 74.50 on silver. And again, we're going to have a problem. We are going to have lots of problems, especially now. This is the month. Every week in June, I think things are going to hurt a little more and a little more. And apparently, and I'm sure we'll get a tweet any minute now that says, we're going to have a deal. Right? We'll have a deal anytime now. But back to what we were talking about. So think about this. The Fed makes up an inflation number and then decides, well, it's okay that the number's higher than that. But you didn't say that when you made up the number. Matter of fact, remember, they guaranteed us, 2% is just right around the corner. Matter of fact, they lowered rates, 8 or 9 times? And we're back at 4%. And everybody knows it's a lot higher than that. And just last week, just a regular week, $742 billion. $504 billion was between 4 weeks and 26 weeks. Which just means what? 6 months from now, the whole thing got to be rolled over and rolled over and rolled over. The remaining $238 billion, mostly all of it in 2-year notes, but they did sell some 7-year notes. No 10s, no 20s, no 30s. And, of course, on top of that, the money from tax returns is now gone. It's all gone. The Treasury is already $50 billion below the $900 billion that they want in the checkbook at any given moment. So this is going to be one of those things. We're going to see Treasury issuances spike back up again now, right? We have, basically what the Treasury said is this year's tax returns got us a little over a month. That's it. Little over a month. And now the auction sizes will grow from here. And it's alarming, these numbers, in the next year or two. We're going to have Treasury auctions where it's like weekly. $1 trillion. $1 trillion. Why? Because they just stack all of this stuff and roll it and roll it and roll it and roll. Why do they roll it short term? Well, simple. They know when they try to stretch it out over anything over 2 years, Treasury markets don't like it anymore. They have these things. Remember, I've been teaching this. They're called tails. What does that mean? Well, let's look at the 10-year note right now. If the Fed was selling, the Treasury was selling a 10-year note, they want to sell it for $450 or less, $450 or less. The problem is there's not enough bids at that number. They may be able to sell some of it at that number. And let's just say they're trying to sell, $30 billion, something small. I mean, I'm not even throwing out a big number, 30 billion, 40 billion. By the time the auction is over, the highest bid maybe 451, 452, 453. And guess who that bid's coming from? It's coming from the banks. Why would the banks step in? And the reason is very simple. The banks are like, we're losing way too much money as these yields. Remember, as Treasury yields go higher, right, that's losses for people that have them. It'd be interesting to see what these rates would look like, Jason, if these banks were coming in and providing, I guess, a floor, or, well, I could probably call it a ceiling to the rate, to how high the rates would be. It'd be really interesting to see what real demand would be. Would we be talking about 5%? We don't know, right? Because why? They don't want price discovery. Why is the Federal Reserve? Do you know the Federal Reserve? They're buying treasuries every week. Do you know the Treasury is buying treasuries every week? Why? Because they don't want price discovery. They don't want you and I to know how bad the problem really is. But don't worry, Kevin Warsh going to fix it by just raising the inflation target. Right, Jason? Problem solved.
Well, you asked what happened if the banks would step aside. And I know you said specifically on rates, but if they just stepped aside, if the banks were gone, controlling federal government policy, we'd have a huge market crash, Joe. They weren't, they caused the conditions that are making it so extreme. We have extreme problems. So if they stepped aside, we'd have a huge market crash. But then after that, if they stayed out of the way, the markets would just take care of itself. It did it that way for a long time. We didn't need any centralized banking to make things work, and we had no inflation, and people were prosperous, and that's what would happen. But yeah, Joe, if you're talking immediate, anything that these controllers, if they step out of the way and stop controlling it, yeah, it's a disaster, because they can barely keep it kind of in whatever range it is that they want to keep it in, as they decide what emergency is going to be next to blame it on.
I just don't know when we think about why do we have bubbles? Why are we in a bubble right now? We all know we are. Right? We don't have to be a rocket scientist to figure it out. The answer is simple. They keep intervening in the markets. Right? Right now, let's guess at inflation. I don't know, 5%? Now, and again, let me say this. The Fed's inflation, right, the way they calculate it. We know that they said, well, 3.9 or 3.8, but we know the next one's going to be 4 something, right? It's probably 5, which means inflation's closer to, 10 for everybody else? Could you imagine a Fed's funds rate? Because it should be, if inflation's 5, the Fed's funds rate should be 6 or 7. See, how banking's supposed to work, let me enlighten you. This was the trick that they said. Yeah, okay, fine, we admit it. We want your money to be worth less. But don't worry, because if you have it in a savings account, we'll pay you interest. And the interest was always a little above the inflation rate. Usually, go back to the 80s, 90s, at least 2%. Yeah. Okay, yeah. We devalued the money, but we'll pay you enough in interest that you're going to be ahead. Right? Of course, then they went to 0. And now the Fed, look at, they're saying the Fed funds rate's between 3.5 and 3.25, 3 3/4. We know the inflation rate is higher than that. Guess what the banks are paying you, right? You're lucky if you're getting 3%. Well, if inflation's 5%, you just lost 2%. If the inflation's 10%, right, you just lost 7. This is what happens to everybody that's holding on to treasuries right now. We went, this is the problem of going, what did we go, like 15 years of zero? So all the treasuries that matured, so of that $740 billion, at least $500 billion of it's rolling over money, right? Hey, we got to resell it. The time is up. Whether they bought a 4-week, 8-week, 2-year, 5-year, 10 years. Imagine going back 10 years ago. You paid almost nothing. You're losing almost 5% on those bonds today. Yeah, it's not a great situation, is it? Patriot Radio News Hour. We got a great special coming up next.
Oh, sir. Yes, ma'am.
800-951-0592. Two limited but extremely good specials today. I've got 10. I know I wish I had more, but I got 10 $20 gold pieces. Right now, you're looking at a spot price of $44.65, $4,465. I've got these 10, $4,450. So that's $15 below spot. I only have 10. And actually, guess what, guys? Sorry. Spot's now $44.76. We know gold does not like to stay below 4,500 very long. So $26 below spot. $44.50. And I've got 10 $20 gold pieces. Silver. Silver. Looks like silver's going to go positive here. $75. I have 25 rolls of half dollars, 90%, $10 face value rolls. They're $495. That puts them at $69.23. I mean, we're approaching right now. Silver is $74.92. $74.92. That's $5.69 below melt, below spot, below melt. Right? If you took a blowtorch, $74.92 times 7.15 ounces, you got $535.68 worth of silver in those rolls of half dollars, and you can buy them for $495. Yep. 800-951-0592. 10 $20 gold pieces. Every time I look, gold just keeps going higher. Gold's $44.80. These are at $44.50. And then silver. Well, guess what? Silver just hit $75. So there you go. These are at what? $69.20-something here. $4.95. And these are half dollars. This isn't quarters or dimes. These are the half dollars. I've got 25 rolls of those. 25 rolls, half dollars, $4.95. 10 $20 gold pieces, $44.50 at 800-951-0592.
You know, one thing, Joe, one thing that people don't realize about half dollars is they are a little bit more than a third of an ounce of silver. So 3 half dollars has more silver than a Silver Eagle does. So when you buy a roll, you get 20 of them. So you're getting over 6 ounces, getting close to 7 ounces.
7.15 ounces.
Correct. So, yeah, it's pretty cool because, I mean, not everything has to be the 1 ounce silver, coin for you to understand how many ounces you got. You got $3.50. You got more than an ounce of silver, Joe. So I know that junk silver right now is not being melted by the refineries, which is keeping the price down. This is an opportunity to buy. We've had a lot of people wanting to sell these, and I said, hey, look, this is not a time to sell this stuff. This is a time to buy this stuff. So we haven't had a lot of opportunities with junk silver lately because we don't want to, we caution our customers not to sell at these ultra low prices. But when we got them, right, Joe, we'll sell them, and it's just your benefit, your reward, right, Joe?
Yeah, and you know what's so funny? We're talking about selling at $69 and change, and saying these are low prices. Right? This is where really the whole world is at right now. Right? We've got fiat money that looks like is on the precipice of a wipeout, right, of some sort. Revaluation isn't the right word. Jason, you and I were talking this morning, and you guys know the Treasury, the president, right, the people at the Fed, everyone's been whispering loudly, right, leaking, hey, we want to revalue gold. We want to revalue gold. That's an option. We have that. That's one of the tools in the toolkit. Because if we revalue gold, because right now, this is how idiotic they are. Do you know what they valued gold at in 1971? $42. Today, it's almost $4,500. Did gold change? Did it grow? Is it like gremlins? Did someone pour water on it and poof, right? There was, way more gold or way less gold? No. Well, what did they do? They just kept printing money and devaluing it. So now, why do I bring this up? Because there's a plan that seems to be at work here, that at some point they're going to revalue gold. It will take gold from being worth about $11 billion to about $1 trillion. Okay? And it's actually it would be just under, like $800, $900 billion, something like that. Jason, I've been hearing, and I know you've been hearing this as well, that the government is talking about a Bitcoin reserve, and reports are this may be how they fund it. They're actually, here's the funny part, they're not going to sell the gold, no, but through a journal entry, they're essentially going to borrow against it and buy Bitcoin and not have to see, we didn't raise the debt, we didn't raise this, we didn't do that, it was just a paperwork transaction.
They're going to revalue the price of their gold, which is sitting at $42. It's not going to make your gold more valuable. Nope. It's just going to give them a chance to buy something with it. It's like 1933, except for they're really still not going to give you your gold real value.
We'll be back after the break. 800-951-0592. $20 gold below spot. $44.50. Silver $half rolls. That's 20 silver $half. 7.15 ounces of silver. Approaching $6 under spot. Means it's under melt, right? $495. I've got 25 rolls of those. Just to give you an idea, a $half roll, it's $565. $495. $20 gold pieces, $4,600. $44.50. 800-951-0592. And yeah, it's hard to see. You know, we had the oil CEOs out last week. Jason told you silver or oil's going up, right? Because Exxon and Chevron are like, hey, silver, gold price. I'm going to get it right. Oil prices are going to go through the roof here any week now. Yeah, I don't know. Did you see? Now we brought up the Bitcoin thing. I got to bring this up. Jamie Dimon is on the warpath about the Clarity Act. Him and the CEO of Coinbase, Brian Armstrong, they've been going at it on social media and all of those things. What's got Jamie Dimon so upset? It allows cryptocurrency firms. This is all about, by the way, this is about, just to be clear, the Clarity Act allows cryptocurrency firms to effectively pay interest on deposits. So you're telling me that only, Jamie Dimon, only banks can do that. You can't do that. Joe and Jason, you can't do that, right? Any business, you're a business. You can't tell people you're going to pay interest on their deposits. How dare you? Stable coins or something like that, he said, without the protection they should have. It has almost no legal protections. See how much better the bank is, right? See, we got these legal protections. Of course, don't pay attention to, we stripped you of most of your rights when it comes to that protection, right? They tell us we've got $250,000 of FDIC insurance, right? Problem is, how much money they got? 1%. That's right. 1%. That's it. That's their safety net. Their safety net is 1%. Of course, remember what they decided after the last financial crisis when they had to rescue the banks. Oh, we're not doing that again. Oh, no. Next time, we're going to make the depositors pay. So Jamie Dimon's upset that someone would have the audacity to say we can pay you interest just like the bank pays you. Now the problem, why are they really mad? Because they're going to pay more interest than the bank will. That's why. I mean, let's not kid ourselves. That's why they're mad, and they got a monopoly on this thing. But see, since they don't have any protections, and of course, this is one of his arguments. I'm not kidding now. Ready for this? Hey, we don't know about these stablecoin payments. Yeah. One payment may be legitimate. The second one may be a sex trafficker. Uh-oh. Wait a minute. Right? Didn't you guys, Jeffrey Epstein could bank all he wanted, right? I mean, Jason, but you just almost got to laugh.
Yeah, I don't think there's no I don't know, control over what's going on and exactly. There is control, but if they're on your television, I don't think. I told Joy I watched a documentary over the weekend. I don't think these people really know what they're doing. I think the people that control them know exactly what they're doing. But I think the people that are in charge are throwing mud up against the wall because those that funded them to be in those positions just said, here, just sit in this chair and just do whatever. If you do anything bad, I'll tell you to stop it. I think that's what it is, Joe. So yeah, it's lunacy. It's nonsense. It's crazy behavior. In just the first month of the Iran war, Trump said about 15 to 20 different things on a day-to-day. And every day he had a new position, which basically was counter to the previous day. And then the next day, and then the next day. And that was just March. Now we've started June, right, Joe? And we're going to see what all these choices are, where they're going to head. What are the economic consequences that are heading our way? And it's a frightening situation. Joe and I are watching it. Joe's in Arizona. He gives me some updates. He doesn't give me a lot of updates, but he's giving me the updates, of what he's seeing there in Arizona. I give him the updates here because the radio station we're talking more businesses, and it's some ugly stuff. Ugly stuff. You better have your savings right. Obviously, if you guys need to cash in because things are tough, that's what we've been doing. We'll do that for you, but hold on to your hats, right, Joe?
Yeah, when we get back, I got an update. A massive explosion on a container ship just happening here. I'm watching the video of it. It's like, more war. 800-951-0592. We still have $20 gold pieces still left. $44.50. Well below spot. Have 10. Started with 10, still have 10. Sold some rolls of $50 already. So remember, we only had 25 rolls of $50. $495. That's like almost $6. It's crazy. Below spot on those $50. 800-951-0592. Looks like we have a commercial cargo ship that was struck about 65 nautical miles southeast of Iraq. There was video of this. This thing is one of those huge cargo ships, with all the containers on it. A big hole in the side of it. It looks like it's taking on water. I don't know if it's going to sink or not. It was a Panama flag tanker hit by an explosion in Iraq territorial water, and now there's report of possibly a second ship that has been hit. I'm waiting on confirmation on that. This one off of Kuwait, another one off of, so now make it 3 off of Iraq, a Greek-owned chemical product container. All right, that's not what you want in there. We'll see, though. So it looks like, Jason, 3 different reports now of vessels being struck somewhere around the Strait of Hormuz. We'll see how it is. So far, nobody's really reacted in the same way that they reacted before these things came out. You got oil up about $7. Wall Street, it's down, but not a ton, right? Not a ton, because NVIDIA, they're going to spend a bunch more money, so everybody's happy.
Well, but we know it's the biggest companies on the markets are the only ones holding it up. But right. Beware, everybody, about thinking that a market crash is coming right now or a month from now. Be careful about what you think. The thing about saying, hey, there's going to be a market crash, it's absolutely going to crash, everything's going to go down, is if it doesn't go down for another 6 months and you've sold those assets waiting to buy it cheap, you're losing a lot of opportunity. And there's inflation involved here. Inflation artificially pushes up asset prices. So be careful about, hey, I'm going to sell everything, go into cash like I'm some Warren Buffett. We're not telling you to be like Warren Buffett when we talk about him. We're saying that Warren Buffett is specifically got a plan in place, and he's moving out of very specific stocks. Warren Buffett isn't I have 50,000 stocks I'm into. He has like 8 things, maybe 12 things he's in. So when he sells his stuff, he's decided that those individual things are no longer going to be good. But being in a whole lot of cash right now with asset prices going up, we have texters coming in, Joe. We got people coming in saying, oh, look at Bitcoin's way down today. It's like, well, yeah, we talked a little bit about Bitcoin earlier. I don't know if Bitcoin might be one of those things that are artificially pushed up here soon. Things are getting wacky, Joe.
Bitcoin's down because Michael Saylor had to announce that they had to sell some. He's been behind the guy.
Wow, maybe this is the time the government has decided they'll start buying some, Joe.